Hello, and welcome back to Wealth Vigilante. Today we're diving into one of the most challenging periods in modern history, the Great Depression. It's a story of despair, resilience, and lessons that are as relevant today as they were nearly a century ago. Stick around because by the end of this video, you'll understand not only what caused the Great Depression, but also how its lessons can guide us in building financial resilience today. Let's start with the basics. What was the Great Depression? The Great Depression was an economic downturn that began in 1929 and lasted nearly a decade. It's remembered as the most severe financial crisis in modern history, with unemployment skyrocketing to 25% in the US and millions losing their homes, jobs, and savings. But here's the thing. This catastrophe didn't happen overnight. It was the result of a series of mistakes, both personal and systemic, that spiraled out of control. The first major trigger, the stock market crash of 1929. In the roaring 1920s, stock market speculation was rampant. People were borrowing money to invest in stocks, expecting prices to rise forever. This phenomenon is called buying on margin, but when the bubble burst, those leveraged bets collapsed, and investors lost billions almost instantly. Here's a lesson for us today. Debt-fueled speculation is dangerous. Whether it's in stocks, cryptocurrency, or real estate, betting more than you can afford to lose can have catastrophic consequences. But the stock market crash was just the beginning. A second major factor was the failure of the banking system. Back then, banks weren't insured like they are today. When people panicked and withdrew their savings, banks ran out of money and collapsed. In the US alone, over 9,000 banks failed during the Depression. Families lost their life savings overnight. The takeaway? Diversification and safety nets are crucial. Don't put all your money in one place. Whether it's your bank, your investments, or your career, you need a backup plan to weather the storms. Now let's talk about overproduction. In the 1920s, industries like agriculture and manufacturing were booming, but they overproduced goods. When demand dried up during the Depression, businesses couldn't sell their products, leading to mass layoffs. Here's the parallel to our lives today. Don't overextend yourself in times of plenty. Whether it's spending beyond your means or taking on too many projects, it's crucial to plan for downturns. As the saying goes, save for a rainy day. Another major issue was government inaction. In the early years of the Depression, governments tried to balance their budgets instead of stimulating the economy. Tariffs like the Smoot-Hawley Act worsened the situation by stifling international trade. It wasn't until policies like Franklin D. Roosevelt's New Deal that the economy began to recover. The lesson? In times of crisis, action matters. Whether you're managing a personal financial setback or running a business, you can't just sit and hope for things to get better. You need to adapt and take decisive action. But here's the silver lining. The Great Depression also revealed the resilience of people. Farmers learned to barter when cash was scarce. Communities came together to support one another. And innovative companies like Procter & Gamble thrived by adapting their strategies. They focused on creating affordable products like soap that people needed even in hard times. Tough times breed innovation and resilience. When faced with adversity, don't be afraid to pivot and think outside the box. So what can we do to protect ourselves from another Great Depression, or even from smaller financial setbacks in our own lives? 1. Live below your means. Don't let good times lure you into overspending or taking on too much debt. 2. Diversify your investments. Spread your money across different assets to minimize risk. 3. Build an emergency fund. Aim for at least 3 to 6 months of living expenses saved up for unexpected downturns. 4. Invest in yourself. The skills and knowledge you acquire today can be your greatest asset during tough times. The Great Depression was a painful chapter in history, but it taught us invaluable lessons about resilience, caution, and innovation. The choices we make today, how we manage our money, how we approach risk, and how we adapt to change, can protect us from repeating the mistakes of the past. If you found this video valuable, please like, share, and subscribe to Wealth Vigilante. Together, let's build a financially resilient future. Until next time, remember, history doesn't have to repeat itself if we learn its lessons. Stay vigilant, stay wise, and stay inspired.